A warm welcome, a very warm welcome, and a very good morning to all of you. I'm already having some questions. So let's begin, and when the parts of the webinar are pertinent with the questions, we will get to those questions as well. So to begin with, those who are very new to trading, you have been asking me right now, you can go check out my YouTube channel, the rest of the videos apart from this. If you go back to the video section, if you really go deep into the past, you will see a lot of basic videos, a lot of detailed webinar on basics of technical analysis. I would highly recommend that you take that up and take it as if I'm giving a webinar right now. It is only the fact that it is recorded previously, but it was given to a lot of people. It has helped a lot of people get introduced to technical analysis. And there are a lot of videos which deal with specific topics like trading psychology, specific topics of trading technical tools and analysis. Today we are here to discuss something very advanced, something very special, and something very different, right? And we are going to stick to indicators. I will entertain each and every question that I can promise you, as long as it is not coming completely out of the bounds of our topic of discussion. I will entertain it. Anything related to trading, I will entertain. If you want to ask me anything about trading psychology, I will entertain. I'm there for you. I want you to succeed because your success is my success. So guys, this is Mohak Pachisia. I've been teaching for more than 3 years now and have market experience of slightly more than 9 years. In all the time period, I have gone through a phase of learning which was very informal, and then I made it slightly formal, then I made it more formal. I have also completed the Chartered Market Technician course from MTA USA, which is the best course in technical analysis. However, the most important thing I believe is not the education degree or any kind of social validation that you can call price as well. What matters is what you do on the screen. Trading is execution. I tell my students that, and I live and die by that rule, that trading is execution. Right? When it comes to technical analysis, one of my deepest passions is technical analysis. One of the most interesting subjects I feel in the world, and that can ever be. The extreme to which prices go in each and every time frame and the patterns they create, they perpetuate a picture on the chart which is nothing but an essence of human habit. Man is a creature of habit. A lot of people approach me, call me. There are multiple courses I have, starting from the very basic technical analysis course and various others. So, a lot of people approach me. I tell only one thing to everyone. You see, you don't need to buy into the myth that everybody has to lose in the market. If you taste a little bit of gambling and want to succumb yourself to it, you will go towards that direction, making any excuse. Some people even make technical analysis as an excuse. They become delusioned. And I also say that if you are hell-bent on really getting into something methodical, something that works in the long term, something that gives you results consistently, you will do everything to go towards that. As much as you are here today, as much as many people have been in my past webinars as well, right? Knowledge is a treasure, but practice is the key to that treasure. We should never forget that, and in that spirit, I expect all of you to pay clear attention, keep your eyes and ears open, see what I'm about to show you, and understand the subtleties of it, as well as understand that each bit of it is grounded in very deep roots of research and can be replicated by you as well, only a matter of time. This introductory webinar is about the Indicator Factory course. The Indicator Factory course, which I'm about to begin, towards the little bit second half of September, little later than second half of September. And even though this is an introductory webinar, do remember there is so much to learn from here. I cannot tell. First of all, what are indicators? Let's begin with what are indicators. Right? Basically, indicators are tools. They are technical analysis tools. Now, if somebody comes and tells me technical analysis tools, what are technical analysis tools, right? Somebody comes and tells me what are technical analysis tools. I would say that each of the tools helps you in discovering something about the price. Candlesticks by itself are not a trading system. They are a tool. Elliott wave theory by itself is not a trading system. It is a tool. When you have a combination of tools, you can create your trading ideas, generate trading ideas by seeing what are the tools and how they created a system, right? And once this system is created, you can test for its consistency. And this doesn't have to be a system testing online. That can be a system which is a discretionary system which has logic in place and discretionary tools in place. So similarly, technical indicators are and oscillators are basically tools. I'll come to what oscillators mean by themselves, but yeah, indicators and oscillators come under the one same category. We can gauge certain aspects of the price. So indicator number one stands for something. That aspect of the price can be gauged. The second thing is that all of these indicators are derived from the price itself, or rather most of it. Most of the indicators are price based, and they are calculations of the price using a certain formula for certain indicator that is plotted on the chart. And as we go ahead, the chart develops. As the price goes ahead, the data of the price is taken in, and the development of the indicator drawing is also made. Lastly, technical analysis tools, most of them are very subjective. It's far more subjective than people normally think. And indicators take an attempt at making things a little bit objective. Little bit objective. Objective meaning then whatever I see on the chart, there is, and whatever you see on the chart can be clearly discerned, doesn't have to be really pondered upon too much, doesn't have to be analyzed too much, and we both may see the same thing and say the same thing about the price of the stock. Whereas in case of patterns, someone can identify or misidentify a pattern. Right? So as long as I know the indicator, what it stands for, I can say that, okay, this indicator, which is meant for this, right now is showing me that the price has a possibility of doing so and so. So this is what indicators are. Some more pointers. Something that can clarify some misconception. A lot of people have this misconception. First thing first, they think indicators are something which are like a signal providing service. इसके ऊपर जाएगा तो buy, इसके ऊपर जाएगा तो sell. Not at all. Indicators do not provide buy and sell signals. Indicators are not by themselves a trading setup or a trading system. Each indicator does have certain spaces. Each indicator has certain spaces which in certain occasions will give you amazing signals if you take it like signals. But on other occasions and other phases of the market, those indicators may not really work out in a certain way. Take that in slowly. Make your notes if you like. Indicators are not a software. They're not like a radio or a harmonium that works or does not work. What works is your interpretation. And if you have a correct interpretation, you know that if this indicator is showing you the best kind of signals in a certain market phase, in some other market phase, that indicator, and I will have a lot of examples coming, in a certain market phase, that particular indicator may or may not work, may or may not work in a certain manner. Right? Very good morning. Some more people have joined in, and genuinely speaking, I am very honored to have some very good technical analysts and teachers around who have also joined the webinar today. Very honored to have you all, ladies and gentlemen. And again, one more thing, I'm very honored to have a few ladies over here, which in numbers generally are less in webinars because just like the industry is like that. But I cannot understate the kind of creativity I have seen ladies bring onto the table when it comes to technical analysis and trading. So, welcome you all again. Yes, I will take questions. Yeah, I will take questions. You just type it and leave it to me. No problem. Now, the last point, if there is a magic around some indicator, right? If there's a magic around some indicator, and that magic has to and does have a logic behind it. Has to and does have a logic behind it. It is important for us to know what that logic is so that me and you can know what makes the indicator tick. What makes the indicator tick? It is important for us to know what the logic is behind it so we know what makes the indicator tick. If we know what makes the indicator tick, we can approach it in ways which I'm about to show you now. Right? So I hope all misconceptions are clear. Any question? Just raise your hands who had a different conception of indicators and now they have a different conception just by just few words I've said, nothing much. Raise your hands if you had any of these conception that this is going to be a buy signal or a sell signal. A lot of hands are raised, a lot of hands are coming up. Be honest, be honest. Some people did think like this, right? Some people did think like this, okay, and I'm here to burst your bubble that it is not like this. And what tends to happen in the market, we tend to get swayed into something working out very well for a short period of time, and then later when we come back to it, it's not working out. So rather than getting swayed by that, now we are going to understand one thing: to each and every particular thing you see in the market, you must let it pass a few phases of the market situation. The market structure keeps changes with phases, and there will be someone who can come and say, look at XYZ moving average, look at anything, and that anything will work in that language, work in that particular time frame, because the market was, say for example, trending. It was a one-way market, so everything was working. Anything shown to you would be like that. So be careful when you are assessing, right? Now these are how the indicators look like. Some indicators are bound, some indicators are unbound. When I say bound, they're moving and oscillating between certain bound and certain range. And then when they are unbound, they have the freedom to move anywhere. Still, some of them oscillate. There are some which act like envelopes or bands. There are different kinds of indicators. So what we are going to come to now, before we come to the specific category of indicators, because I want to really get into the exciting part very soon, but this is important for you all to know and learn from. Let's take what are the actual implication of indicators, what are the advantages and what are the disadvantages of indicators in markets. First of all, the biggest advantage of indicators is it gives an objective signal. When I look at an indicator, most of the time I don't have to go and think. Most of the time I don't have to go and think. that is it making an XYZ pattern or ABC pattern or this pattern or that pattern. Most of the time, an indicator will stand for what it is for, and I can discern something objectively. Now, obviously, when you get a reading of an indicator, like for example, in my technical trading course, I teach about RSI in great details. You can interpret an indicator subjectively also, and it is useful. But in most cases, indicators will give you objective signals, right? Now, the hand-in-hand disadvantage of it is that although those signals will be objective, clear, but in many cases, not all, but many cases, the indicators will be lagging the price, because if it is coming out of an equation of the price only, then the calculation is made when the price is already moved, then the indicator starts moving, because indicator then absorbs the price data, and therefore indicators tend to give signals that are late, right? Just raise your hands, quick raise of hands for those who have got swayed into indicators and found that they have given a line signal. Wow, quite a few hands up. Thank you, thank you. Moving on. Now, what are indicators helpful with when it comes to discretionary analysis? Always keep the price first in discretionary analysis. Discretionary analysis is about looking at the price structure, price flow, the aspects around the basic core of technical analysis, which are undeniable, which have to be seen in multiple time frames, and then use indicators to confirm your inference, your hypothesis. Use indicators to confirm, and they are very helpful in confirming price patterns, right? And on the other hand, the hand-in-hand disadvantage is they do not give any accurate entry signal. So according to my indicators, I will get confirmed that I'm getting a buy idea generation via a candlestick pattern, which includes say 4 days of candlestick pattern is there. This particular candlestick is telling me something bullish can come up just now. I cut it open and I see the hourly chart. Again, I see there are certain structures which are telling me there is something bullish really coming up. And if I go to the indicator, it is not giving a signal immediately, or it has given a signal 3 days, 5 days, 10 days back. So there is a different kind, although the indicator is in a place where I can say that yes, it is okay for me to go long according to this indicator. But indicator made it okay to go long 10 days back when the price was still falling a little bit. So they do not give accurate signals until we do something with them. So I will come to that part when I show you examples. And everybody should make the use of all that is available, technology that is available, technical analysis tools that are available. Once you are able to make the clear use of all these things which are available, what is going to next happen is that you have to explore it. See, too many things being available seems very good and rosy, but until you explore it in a way which is a studied fashion, there's no point using it, right? Now, point number 3, indicators can be used to develop strategies. This is going to be a major part of our webinar. So on this thought, I'll come back to later. Disadvantages, even though they may be very good, many indicators actually work less in the sideways market movement. The signals are actually redundant. They don't mean anything. Sideways market movement, nothing is happening. So a lot of people get into the extreme ranges in the sideways market and wait and wait and wait, and that indicator turns around somewhere else sometime, probably against them, probably with them. Whatever it is, there is a tendency for the sideways market movement to take away the power of the indicator until it regains its power. The last point, the advantage that a late signal is still early. What I mean by late signal is still early. What I really mean is that as a technical trader or as a technical analyst, one should always understand that you are never the leader, you are the first follower. You are never the leader, you are the first follower. That means my fundamental analyst friend told me to buy a stock, and with due respect to all fundamental analysts, that is a different space. Investing is a different space. I don't know why people compare and talk about it with each other, but it's a different space. Both have their own respect. So my fundamental analyst friend says that you don't know anything. I'm telling you, this stock is at 80 rupees. This is going to fly because the balance sheet says it's worth 200 rupees. I'm like, okay, I don't know this, but if I see what I want to see, I will go buy this stock. He goes long at 80 rupees, and after 1.5 years, I buy it at 90 rupees. And after 3 months or 6 months of me buying, it goes up, and we both exit at 150 rupees. We both exit at 150 rupees. Now you understand one thing: for the time period between him buying and me buying, the stock was doing nothing but stick around between 80, 90, 60 rupees also it went to for one day of very big spike. And when I bought the stock, I bought it when it was moving. I bought it when it was going up. It's not that I want to go long on a stock at the low. I want to go long on a stock when it is going up. And I want to go short on a stock when it is going down. So even though I may have bought it at 90 and he bought it at 80, if there is a journey towards 150, even a penny particular signal is late than what it could have been, it's still early in terms of the potential of the move left. Is this clear, everybody? Raise your hands. Any questions, please ask. And some questions are there. When the correct times come, I will bring it up. Raise your hands, those who are very, very clear about what I just said. Don't be lazy, raise your hand so that I get to know. Okay, thank you so much. Right. Right. Some questions which are there, I will come to that when I'm coming to that part. These are the various advantages and disadvantages of technical indicators. Now, what are the types of indicators? Types of indicators can be multiple. One type of an indicator can be a trend indicator. Now, this again has to come out. A lot of misconception has to really get away. I need to clear the wheat from the chaff. First thing first, each and every indicator is representing to me a certain quality about the price movement, a certain quality of the price movement. There are trend indicators, there are volatility indicators, there are momentum indicators, there are volume indicators. Now, for example, if I'm talking about a trend indicator, prices tend to trend. Traders will make the big money, the major money when the markets are trending. They should be in the markets when they are trending, and trending even strongly they should be in. So trend indicators indicate to me the health of a trend. Sometimes they attempt to show me the beginning and the ending of a trend, but since indicators are lagging, that can be questionable. However, the purpose of trend indicators, and we will take up one today in great details, I will show you a trading system, how I have done rule-based trading on this basis. Okay, and I want you all to understand what I'm trying to say. A lot of things I'll be showing, a lot of things I'll be keeping. I'll just show how this thing is working. Why? Because I don't want anybody to get overly biased and start applying and putting money. And believe me, sitting where I'm sitting, it becomes a little difficult. Some people ask me questions regarding stocks, and if I say anything no, next day they will go and I want to apply that. And then I get the message. I said, you did not take any learning, all you took was a call. That too also it was not designed for, it was just a rough idea about something I was explaining in alignment with the stock. And so coming back, trend indicator, volatility indicator. Stocks have, any asset class has a tendency, the price has tendency to rise in volatility, to crunch in volatility. So when the times of low volatility are there and the times of high volatility are there, when there are times of shift in volatility, the indicators that indicate to me that in subtle ways, some other indicators indicate to me, like for example, a lot of people know about Bollinger Bands. Lot don't people don't know about choppiness index. Now, choppiness index is also a measure of volatility, but it's a very different kind of calculation. Ravinder ji is asking a question. He says that is there any indicator which falls more than one category as listed over here? Yes, there could be one indicator showing me more than one thing. Essence of, say for example, the essence of both point number one and point number three, something like that, or point number two and point number three, or point number one and point number five. That can be indicators that give me, and that was a very good question. Thank you. The third, momentum indicator. Now, stocks are getting into inertia and they're getting in and out of extremes momentum. As they're going in extremes, the intraday trader who is acting in extremes, a huge tide, a huge psychological tide pushing the markets up and down. When the intraday trader is in action, the masses tend to push and pull the price in extremes in the smaller time frames. The investors, the longer time frame, also push and pull the markets in the longer period on the weekly charts, right? On the daily charts. So in the extreme movement, there are spaces of high momentum, there's a space of low momentum, there's a pace of slowing momentum, increasing momentum, which tells me a lot about what the price can do next or what it cannot do also sometimes. So momentum indicator. Last is volume indicators. Now, volume indicators may be calculated not just from the price, but maybe also from the volume or only from the volume. Not going to dig too much deep into that because of so much time I can take. In a good way, I'll take some indicators, so that is helpful in passing you on the clarity. One last thing, just to wrap this up, those who are very new, and I'm talking about all these things may seem very nice, and it is very nice, trust me, but whenever you're approaching the market, it is important to have a probability mindset. Most people are having a survivor mindset. They are not having a probability mindset. In an environment of uncertainty, even the best combination of the best things can go wrong. We have to accept that. We have to put our head down and we have to say that when I say I'm consistent, I mean that if I take 10 trades, most of them are right. If I take 20 trades, I will net out in profits. That is how strongly I have understood my system very well, even if it is discretionary. But when it comes to a trade by trade basis, if sometimes things go wrong, you have to accept it, right? Gopalji is asking, what is the difference between momentum and volatility? Very good question. So volatility, sir, rises and falls. Volatility is showing us standard deviation. Basically, if this is a line, a deviation on the upper and the lower end to a certain extreme is showing me a certain kind of volatility. Okay, certain kind of volatility. And if there is an extreme where it goes beyond a certain level of normal, abnormally it goes higher or abnormally it goes lower, there is representing to me an increase in the volatility. Volatility doesn't have to do with direction. The market can be going up and it can be volatile because the standard deviation has increased of the average price movement. And momentum, on the other hand, momentum is related to pace of the movement. Pace of the movement. So if you are driving a car on the highway, listen to this guy. You're driving the car on highway and there's a big U-turn you need to take, and you are going at the speed of 90 kilometers per hour. 200 meters ahead, there is a U-turn. Will you continue at 90 kmph? No. You will slow down and then take a U-turn. Similarly, at different stages of price movement, before prices take a U-turn, they also tend to slow down. In the middle of the journey towards the destination, they tend to be very strong at many times. Okay, and again, all this in isolation doesn't really work. You have to use other aspects together with it. But yes, that is what momentum indicators and momentum stands for. Sorry for the spelling mistake. My bad. Sometimes I tend to repeat the kind of mistakes I used to do in class 5, but that's okay. So I hope everything is clear. Any question in particular you want to ask? Any other question in regard to this slide or just previous slides? Right? Thank you so much. So moving on to the next part. Okay, before that, this part on the slide is left. Some indicators are also called oscillators. I think I've spoken about it just now. Indicators can be called oscillators also. What do you mean by oscillation? Oscillation means oscillating between a bounded region. Okay, so there's an extreme beyond which they cannot go, above which they cannot go. If somebody asks me how, why, the answer is that actually they are because of the formula and the calculation behind the indicator. The calculation will be such that it can never go beyond this, right? So that is the reason. So indicators and oscillators, sometimes if you read, you will find such things. Okay. Now I'm going to come back to how to build your system. What are the steps to build your system? Just the discussion doesn't become very boring and theoretical. For that reason, that's this part of the webinar. We're going to straight dive into moving averages, a trend indicator. We're going to dive into straight moving averages. Now, all of you must have heard of moving averages at some point, right? If somebody hasn't heard, then they're hearing it now. But yeah, moving averages are very commonly known. Very commonly known. Okay. So what I'm going to do is I'm going to take up a moving average. Right? I'm going to first show you how moving averages generally behave, what they mean through one example, and then going to take another example of a trading method I have created on the rules based only on moving averages and nothing else. Based only on moving averages and nothing else. I will show you how it is working. I have taken a considerable 20 days of a particular stock, and in those 20 days I have taken a screenshot of each and every part of the time it started to give a signal, and what the result would have been, what are the commonalities of the moves which are coming after that kind of alignment coming together only on the basis of moving averages. Very simple. First, let's understand what moving averages are. Okay. Now, a moving average. In statistical terms, a moving average simply means that there is a series of price data, series of number, say 7, 17, 23, 289, 546, 312. There's a series of number. And you take up the first, say, suppose I'm looking at the 3-period average, 3 moving average. Okay. So I take the first 3 numbers, I make an average out of it. Then and I plot a point on the chart. For the next number, I let go of the first number. Okay, so out of the series of trade, I have the first 3 numbers. What I did, I took these, made an average, and then there are further numbers in the series, right? So I plot point number one with this average, 3 period average. Then I let one go and I include the next one, right? So this is the next moving average, and so on and so on and so on. So as I go, the moving average will be a different calculation compared to the price, but it will have a connection with the price. So markets don't really have random numbers that you know that if today suppose bank nifty is at 28,000, tomorrow it can go to extreme, but generally it will not go to suddenly 3 and then suddenly 50,000, right? So when it comes to moving averages with prices, they tend to follow the price, they tend to follow and show, that's why it's called a trend indicator. Now what I'm coming to is that just any moving average does not really show you any signal or this or that. Everything has a meaning, everything needs to be scrutinized, and then a hypothesis needs to create. So for example, I take a short period moving average. When I say short period, I mean to say that the effect of that moving average has short term implications. I mean to say that the moving average moves faster because it takes 20 price data, and for that 20 price data to completely change into the other 20, it takes full 20 days. Whereas in case of 200, it will take more days. So it will move faster, right? Medium period, 60 period, 60 working days in a quarter, 200 working days in a year, 20 working days in a month. Okay, so some logic I have behind it, right? Other than the logic, the hypothesis on the chart also will be helpful. What do we observe before I come to the chart? What do we observe from a moving average? First, that moving averages can show us that they are operating like a dynamic trend line. I'll go slow. Moving averages can be a dynamic trend line, a trend line that keeps changing with time. They can show us that aspect, and therefore the points where the moving averages and price are coming together, they tend to become important points and important zones rather, right? Important zones. Okay. Point number two, averages crossover also. So if I take more than one average, I can pull up more than one average and I see what are the averages doing between themselves, not just with the price. And I will see that one is cutting the other one from above, then later it is cutting, the other one is cutting the other one, etc. etc. So that those are called crossovers. They can converge and diverge. The CD means converge and diverge, right? CD means converge and diverge. When they say converge, that means the two averages are very close to each other. When I say diverge, they're far from each other. So from convergence and divergence, we come to expansion and contraction. If two averages are close to each other and far from each other, they represent expansion and contraction. I'll come to the chart for this. Last part we can say moving averages shows a sense of mean reversion. Again, we see this from the chart. So now I'm going to pull up a chart in front of you. Just let me open my charting software. Guys, just be patient with me because there's so many charts to show all of you. I have about 16 screens open in front of me. Okay, so I just ask you to be patient if I'm taking a minute extra to open my chart. So let's take for example, we have the chart of Nifty. Okay, and this is just an example. The system part is not related to these moving averages, but to explain you in just 2 minutes the principle of moving averages, I'm bringing this up. So I take up the studies, I put average over here, I put 20 period moving average. So let's make the 20 period moving average a completely white line. Okay, so we can see what it is showing to us. I could have had it plotted before, but I want to do it in front of you. So we see a 20 period moving average representing to us the average of 20 period. Now averages are calculated generally on close. A lot of people don't know this, but you can calculate the average on price low also. So just take a look at what happens if I calculate the price on. Just take a look at the chart. What is the change on the chart? I've taken price low and modified it. See, when I've taken price low, it has gone farther away from the price movement because we are seeing an overall uptrend. Right? Now I will take the price high as the input, and then you see how it is doing. Price high, it has come closer. Right? Again, I'll make it price close. It will come little lower. So there are things you can do with particularly moving averages. 1 second. Where is this box on? Yeah, they're particularly moving averages. So lastly, what I'm doing is that I'm going to stick to one thing. I'm going to stick to the price close, right? And that's it. Yeah. So just to tell you, originally moving averages concept come from price close, right? Earlier you used to have only the line chart. So moving averages, you can see in 20 period moving average, there are different spaces. So let me analyze this part of the market, what is happening. What I see is happening is on the occasions of big trends, when the trends are big, in those occasions I'm seeing clearly that the prices are going beyond the moving average and going to an extreme and then coming towards the moving average. They're going beyond the moving average and time and again they're coming towards the moving average. This is showing me that what does the average mean? Average means a mean. Prices tend to revert to mean in different time frames. Okay, prices tend to revert to mean. In this patch of sideways movement about, I guess, 1.5 months, we saw in April, right, June, part of June, and the price is hovering around the 20 period moving average. So we see a patch of time where the price is hovering around, and then I see patches of time whenever it is going to the extreme, it is going farther away from the moving average on either direction, and then in between in retracement it is coming back to it, right? If I follow a certain trend using the 20 period moving average, I have to understand these things. I just cannot go and say that if the price goes above this, I have to buy. Otherwise, if I go and buy above when the price is going, then there's a problem. I cannot say I have to sell that it is closing below the moving average and cutting it from the top. Because if I sell over here, it's pointless. I will be whipsawed with a lot of times, especially in these sideways period. So if I'm using one moving average, a particular sideways movement, a particular crisscross, whipsaws, and if I take it as a training signal, that is, there is a problem. But what I can learn from it is the principle that mean reversion is there, number one. Number one, I can see mean reversion. Okay. Number two, I can see the tendency to follow the trend. Okay. So these two things I'll keep in mind and put the second moving average and see what I can see additionally with two moving averages. So next I take up is the average of 60 periods. We'll make this line a pink line. Right? We can see the average of 60 period. Right? Now, for just one moment, I'm going to hide the average of 20 period so that you can see what are the difference between the two. So in this same time period where I saw the 20 period moving average, in the same time period, I can clearly see that the 60 period moving average is also showing me similar things. First of all, it is showing me that it is has the tendency to go away from price and come back towards it, go away from price and come back towards it, go away from price, come back towards it. Second, I see it has a tendency that when prices start going away from 60 period moving average, it can extend extensively go compared to the 20 period moving average. It can go more extensively. Like you see how it is really going. There's a difference between the moving average and the price, which is very high. Okay, and that time to time it can go. This difference can go way beyond. It has gone with the 20 period moving average. Now coming back to the things together, let's infer what we can infer from it. First thing I can see is that if there is a moving average period compared to another moving average, they both will tend to come near to each other in the contracting markets. When the markets are sideways, the markets have not really been ready to budge. When the market's going to have momentum and currently lack momentum, okay, in those situations, in those situations, I'm going to see that the moving averages are coming together. And then the other situation I'm going to see, they're going to go far from each other. I'm explaining it in very simple terms. I hope you all are understanding, right? Let's see more examples where markets have been sideways and then moving averages have come very close to each other and there has been a big move. We can see this, right? Simple observation, the moving averages come closer to each other and then there's a big move. Come closer to each other, right? Very close to each other, very close to each other, right? When, and third thing I notice is when moving averages two are close to each other and at the same time they're very close to the price. At the same time they're very close to the price. There's a movement, but when there's a farther away from the price, there's smaller movement. So here I see price, moving average as well as the second moving average all close to each other, leads to a bigger movement, right? When price, a sideways movement in price and the two moving averages close to each other leads to a one-sided movement. Sideways movement in price and moving averages close to each other lead to volatile, extreme one-sided movements. And these movements can last. Are you getting my point? Where I see cluster of price and the two moving averages together, these movements can last. So some things to take away from these two. Now suppose, I'm not saying that you have to use it for signal, understand the nature. I'm putting a third one now for more clarity. So for 20, 60, both we have done. And the third one will now be on a 200 period. 200 period. Now let me take a random person from the group just for a light covering note. Mr. Tushar Popat, which is your favorite color? Please type your favorite color to me. Okay. Will not be able to raise his hands. Type the question, no problem. I will take my favorite color. One of my favorite color. Actually, it's purple, but I'll have to take green as well. Mix up these, right? Let's take turquoise. Turquoise is also favorite. So it is important to have some colors in life. Okay, I've got the message. Green he says. चलो green ही करना पड़ेगा. अब कुछ लोग तो मेरे से अभी बहुत गुस्सा हो रहे हैं. क्या करना शुरू कर दिया ये? Anyway, so this is the 200 period moving average, right? So we see three moving averages now. Let's use the similar principle Obviously, now when it comes to the 200 period moving average, it is very, very obvious that once the price starts going away from it, it goes considerably away from it, even more than the other two. Once starts going away from it, goes considerably away from it, right? And the other principles also follow. When I compare it to other smaller periods of moving average, different periods of moving average, I see when the three moving averages and price are very close to each other, it leads to bombastic moves. Right? I've explained this in some other times with students also in greater details, but I hope you all are getting my point in very simple ways I'm putting it. When the three are together, the white line, the pink line, the green line, when the three are together, leads to bombastic moves. Mind you, it might look small on the long term chart. This is a move from 9,000. This is almost a 1,000 point move. Right? And sorry, more than it's a 1,200 point move. Right? Back then, right? So, if I have taken the principle of moving average and I see every time these three come together, there is a strong movement. Every time these three come together, hover around each other, there's a strong movement, right? There's a strong movement. These tendencies of price movement I can use to understand something from it and then create my own trading system. Obviously, if something is working in the bigger time frame, it is likely that in the smaller time frame it will get noisy. So just taking any moving average will not work, right? What will work is a carefully selected, well crafted system where I can clearly see what happens. Now, first thing is this system has a name, and I know some people will laugh at it, but it's very close to me, this name, because this system is only based for intraday trading, and the first half of the day is all you need to do, very active things. Other than that, you might monitor the trade, right? It's called Mohawk T20. Okay, Tantana. So the Mohawk T20 is about a certain set of rules, bringing in moving averages together, okay, on a particular time frame, right? What are the rules? And guys, all of you, please do not try these things at home until you're very clear, have done your diligent testing, okay? Do try this, of course, try this, but don't try this with money until you have done your diligent testing. Once you do it, I promise you, at least I'm making you think on the right direction. If you do the wrong things, then the price will show you if you go back and look at how this is behaving. Okay, at least your thinking will be in the correct direction. But before you just jump into taking any three moving average, be careful. Okay, the first thing is that on a 30-minute time frame, okay, I want the first candle on a 30-minute time frame to close above three moving averages. I've selected three moving averages. That is the system I'm using. That is the system I use to trade myself. If I make the inside of it public, it will spoil the entire thing because it will not work out anymore. So I will reserve it for the people who want to join the indicator factory course, and such systems out of people who want to join, not just about any secret sauce part. It's not just about the secret sauce. People who join the indicator factory course, they are inevitably going to understand my logic behind making systems. So it was as good as sharing with the system also. Okay. So first thing is buy when the first candle closes above all moving averages. Keep in mind the terms. Examples are soon coming up. Closes, first candle. Okay. Second is the last candle Okay, in the last candle, that means we are looking at the morning 9:15 candle. So the last candle is the previous day candle till 3:30. The last candle, okay, in the last candle, all the three moving averages should not be very far from each other. Yes, two can be close to each other, it's fine. All three don't have to be close to each other also. But all three should not be far from each other. Okay. We'll come to the logic, we'll come to the examples, a very well crafted example with all the trades shown to you. The three MAs should not be far from each other, right? In the previous candle. So that is one check I have to give. And the ultimate check is that the current candle, okay. Now every candle has wicks. So a candlestick, if you see like this is a candlestick chart on a candle. Sorry for my bad drawing. Today I'm in an indicator mode. I'm not in the drawing mode, so my drawing is not coming out very, very well. But yeah, these are two wicks. You see the higher wick. This is a higher wick which is small compared to the entire candle. But if the higher wick is like this, then the higher wick constitutes of greater than 15% of the candle. In other words, the candle within the first half an hour, whatever it goes up, it comes down, right? For those who want more on candlesticks, go to my candlestick video on the YouTube channel. Free, free content is there a lot. Even if you don't want to join a course with me, free content is there. But definitely the course has structured phases, much structured and much more progress students have seen with the structured learning. So these three rules are very important. Now I am opening the chart of UPL and showing you. You don't have to watch anything, Mr. Vijay. I will have to, I'm showing you the example. Okay. This is the particular chart of UPL. Okay. This is a particular chart of UPL. You all can see the chart. You all can see the chart. Okay. Simply a half an hour chart of UPL. I have taken three moving averages. Three moving averages I have taken. Now, going one step in, how a trade looks like. So what I've done is every time there have been trades, I'm taking out the trades which are giving me the trigger or not giving the trigger. For example, this part is giving me a trigger because there's a close above all three moving averages, and in the previous they were not very far from each other, right? So we will come to that with when I've cut open the examples. I'm showing it to you. Yeah. So these are the trades which came about according to the rules in the last 20 odd days. Okay. Now, for people who want to try things, it is not going to be much of a surprise how to apply this. So I've almost literally given this to you for free. It is not going to be a big surprise of how you can make your own system using this. And as I said, your success is my success. So I don't have a problem. Go ahead, use this. Go ahead, use better stuff. But the thing is, you need to understand the logic behind it. The first rule stands for the fact that a close above these three moving averages. So you can see I've highlighted the areas, I've taken the screenshot of the area where the rules have come together. There is a close above the moving averages. The previous candle altogether had moving averages close to each other, a close above the moving averages. Okay, two candles close to each other. Sorry, two moving averages close to each other in the previous candle, and the first candle is having a close above the moving average. I have, for the argument's sake, where somebody comes and tells me, so this can be, what if it was 2 rupees down? I have still taken this. Although it is missing a rule by a small percent, I have still taken this just for conservative sake. Okay. There's a close and the three moving averages, two of them are relatively closer. Okay. Now in the scenario, keeping it very simple, the first trade has worked out throughout the day, so has the second trade. The third trade has come up a little bit and come down, and the fourth trade has hit a stop loss. Okay, there are more trades to come. Hold on. The two down arrows you see are not trades. They are not taken because they do not come together with the rules. So wherever the rules were completely not followed, but one or two factor of the rules were still followed, I have taken that and showed you why I am not taking the trade. First of all, there is a close above it, but you can see the candlestick wick constitutes for more than 15% of the candle. Similarly, over here, the wick of the higher end constitutes of more than 15% of the total candle. So I will not take these two trades. Okay. This again shows me a buy signal, and it has shown that it is above, closed above, sorry, not this candle. It has actually given me a buy signal over here. The candle can be red, even if it is closing higher, I want that. And the wick should not be long now, right? So how many trades did we get? 1, 2, 3, 4, 5, 6, 7, right? I have two more for you on more T20, and this is just one stock in the last 20 days. Okay, one stock in the last 20 days. If you have a buy signal over here, why? Because there's a close above the all three moving averages. In the previous candle, that is this red candle, two moving averages were close to each other. Okay, perfect. This is my entry, and the whole day there's a trending move. The entire day there's a trending move. Similarly, over here, two moving averages were close to each other. Okay. Now, in this situation, the close has not happened. It has happened in the next hours. But just to show you, this is working out. This is working out. So even if I don't consider this trade, I'm still okay. I still have enough trades. So I'm taking this as trade one. The previous slide I'll go to now. This is trade one, trade two, trade three, trade four, trade five. I'm conservatively taking this trade six. Okay. So out of all these trades, out of six trades, okay. So one, two, three, four, one has not worked out. Five, six. Out of six trades, only one has not worked out. And one has hit a trailing stop loss because the entry was here. It went up and then it just came banging down. There is a category and there is a criteria. Yeah. For yes, Ankurji, for this particular thing is 30 minutes. Gopal Krishna ji is also asking a very interesting question. Can we try this for shorting? Yes, you can, but I would not recommend you to until you have tested a system particularly for that reason. I have not included the areas where shorting could have been otherwise detrimental. So there are areas where shorting wouldn't have got you much because the market would go sideways. The reason why you cannot use for shorting is because market has a different nature of movement while going up and while going down. Okay, so you must keep that in mind. Okay, there is a different nature while going up, different nature while going down. And if you are taking a set of three moving averages and you are understanding the rules, the first thing is that if three moving averages are showing you that okay, why am I taking the upper wick rule? Let's look at the logic. The logic of the upper wick is that if moving averages were close to each other, okay, or at all if they were not close to each other, then though we know. But if they were close to each other, still not completely compressed, and there's a gap up, I must consider the trade. However, the gap up will be sold into because the price has hit its extreme. In 3 periods, it is deviating from the price. It has hit its extreme. Okay. Well, in this system setup, Nayanji, the stop loss will be the low of the day. the low of the day. So if I take a trade at this close, my stop loss is over here. I hope I'm clear. Very clear stop loss. And believe me, I want all of you to try something you make of your own, and I always stand for that. I can share all the knowledge because I want to share why something has happened. Just being plain simple on calls or plain simple on a straightforward idea, that is now how it would be beneficial to you either way, not even money ways or knowledge ways. So all of you who are asking multiple questions must understand that I have an approach, and good you ask the stop loss. I have an approach, and that approach you can replicate parts of it, the stronger parts of it. Madhuji is asking, should we look into one time period or can we confirm with other time frames? Good question, Madhuji. I would say that going on to multiple time frames has its advantages as well as disadvantages. You need to try that out. For this particular one, I have not used multiple time frames. Nitin ji is asking, you have taken a trade in the morning only? Yes, absolutely. I've just taken the trade in the morning. That's it. That's it. This system is only for, that is why it's called T20. No? That is why it is called T20. There are more systems I'm about to share, and I will show you how to create a filter for it on the software I'm using. I'm using the Spider software. Ravinder ji is asking, does it work out in futures? Well, futures and cash prices have a linear relationship. I have made this in cash. It, as far as the trading is concerned, it will work out in futures. So Hasji is asking a success rate of this technique. Well, the entire reason I have given you multiple examples from 20 days is just to show you the success rate. So this is a time period, a phase of the market where I pulled it out from. You can see the success rate for yourself. Now, some other time period may be very higher success rate, maybe slightly lower. But in my experience of tracking many stocks through this, uh, there has not been a bad success rate in any phase. It's always been decent, very decent. There can be trades where there can be phases where there can be a fewer trades than usual, but some of the other stock will show you that. And the three moving averages I have chosen and what you choose can be different. So you need to test that. Okay, those three have come after years of work on them and years of understanding. I will share when I'm sharing the entire kind of examples in the course. So most definitely, Puneet again asking the exit rule. Exit rule is going on the stop loss will be the low of the day. So take up any chart. Stop loss is the low of the day. Okay. Yeah. Stop loss is the low of the day because it's just open. No, low of the day. This will be the stop loss. This will be the stop loss. This will be the stop loss. Okay. This will be the stop loss. Here the stop loss is triggered. This is the only occasion. Sorry. Here the stop loss is triggered. This is the only occasion. This will be the stop loss. 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 Mr. Nitin is asking how to follow the trading stop loss. Okay, yeah. So I'll show you an example, Ravinderji. Okay, guys, I'm showing an example. Now, as I said, this is just one filter for the entry I have taken. Trailing stop loss, I have a different target, I have a different entry, but I'm showing you the potential. So I take an entry at this close above three moving averages. I look at the chart after half an hour. Okay, I do my understanding if this is a long wick which has been sold into. So after this, I'm prepared to buy. Do I buy immediately? Do I buy after the low? At the low, at a dip? I don't know. Suppose I buy it at the close. Okay, I bought it over here and I placed my stop losses over here, which is the low of the day. I'm holding the trade and I can see it is trending. Okay, so this is the whole scenario. Now there are other parameters I'm using for trading stop loss also, which are a bit advanced to explain right now. But again, you have to use the logic what I'm saying. You don't have to use straightforward exactly the way I'm doing. Your rules can be different, but the logic with which I'm applying the rules, I'm approaching the rules, that is what matters. And of course, in the course, I'm going to go through different kind of examples, even other than this. Even other than this, I'm going to go different kind of examples. Okay. There, see, knowledge is everybody's. There's nothing like my knowledge and your knowledge. But the whole thing is, when do you share a book with your friend? When you know that your friend will respect the fact that you have shared a good book with him and he will read it, right? So that is why I will share things in the course in a structured manner. It will be better understanding and not be impulsive trading, right? And in these rules, I'm again repeating, why is this rule there? This rule is there because I want to see if the deviation out of the three moving average means that there has been a start of an extreme deviation. Start of extreme deviation. And if it is not going to last, it is very likely to get sold into in the first candle itself. This is point number one. Okay. Point number two. The candle closes above all three MAs is showing me that the deviation is coming and it is sustaining. Okay. So these two have a connection. These two have a connection. The close above these is showing me it is sustaining the higher levels for the half an hour of the day. First candle of the day rather, right? The first candle of the day on this software, this is how it is coming out. In the last candle of the previous day, all three MAs should not be far from each other. So if all three MAs are far from each other in the previous candle, that means there's ongoing deviation. Ongoing MA, there is a extreme in the price. I do not want to touch when the price is at extreme, right? When two are close to each other, that means at least two of the moving averages are not showing me an extreme. Maybe the other one is in extreme because of the previous day calculation or something, right? Now I made a moving average and multiple indicator usage on for a positional trader system also. So the positional trading system, just to show you, I'm not going to explain this in great details. I'm going to explain another one which is far simpler to understand, and I'm going to show you how you can make a scanner on the live markets also. Okay, here there was a sell, here there was a buy. This is the hourly chart. So an hourly chart meaning that these moves are pretty decent moves. If you sell here, the extent of the move is here. Another example of the same category will be Bharat Forge, that was HDFC. Here I am going short. No, Ashish, they are not that MA. Don't worry about which MA they are. That is not important. What is important is the logic behind it. What is important? The learning you take. And when you apply, you will take multiple stocks. I'm going to share with you step-by-step approach to making a trading system. And this is just scratching the surface. Just scratching the surface. Believe me, it is so big. Otherwise, I would have invented it 9 years back only when I started off. Right? This is so big, and there are many types of indicators. A lot I have not even said the names of. A lot of the indicators you don't know the names of. People don't hear it that often. Okay, they accommodate aspects of the price which do not are not accommodated. For example, I just mentioned few minutes back about choppiness index. Similarly, RSI is not the only momentum indicator or the best momentum indicator. I will show you examples on RSI. We're just doing moving averages now. A lot is left. Okay. No, Bollinger Band to confirm this technique, no, I would not suggest that. But yes, you can try. You can try with some other moving average and that works for you as long as it works consistently. Okay. So now, after the moving average, we are going to come to the RSI. Small example and then Bollinger Band with the system. Let's take a idea of what rule-based or systematic trading is. What is rule-based or systematic trading? Let's understand that. Rule-based or systematic trading is what traders, a lot of people confuse it with algos. No, they are not algos, right? No, they are not algos. Rule-based or systematic trading have relationship when a trader is understanding trading in a manner, he's understanding charts in a manner, and is able to put them on certain rule-based criteria. And those rule-based criteria, whenever they call out a trade, they are consistent overall. Okay, these rules are statistical in nature because all the indicators are coming out of a calculation of a statistical input. Okay, a good system, a good system is worth the risk. Totally worth the risk. If it's a good system, consistent data system, it is totally worth the risk. Now, one thing I will add on is some of my students, okay, they already have started sharing a lot of knowledge with me, uh, taking a lot of things from me, ask me questions, and I never stop answering. When students who have done my course, they ask the question because I know the point of view which they're asking from, and where I explain, they have known the structure of the learning. Okay, so we have had discussions. Some of them have started actually building their own systems also. There's a particular core group I have of all my students in the last 3.5 years of my teaching. All my students, there is a group I have in which there's another core group of all the inventions, and we have regular meetings. No fees for that. Lifetime we have it. We have regular meetings just to share different ideas with each other. Okay, every day someone is sharing screenshots, this, that. It is not like any other WhatsApp group, mind you. So a lot of them have actually started understanding certain indicators and certain building of systems. I told them to look at how the signals are coming out so that you are better able to understand, the nature of the system. So the nature of the system tells you that okay, my system tends to give me a high momentum move. When it tends to give me a high momentum move, I will be alert in a different manner. When it tends to give me a move which comes after a dip, then I will want to buy on a dip or sell on a rise. Right. So these are the various aspects. You will trader needs to understand that also. Right. Uh, so Hazi, we'll just stick to this right now. Let me finish the presentation. Then if I can come there, definitely. Okay. Because there's a lot left. And there's another system which I'm going to share. Much more interesting inputs also. Okay. What is the advantage of a system is in the systematic trading, one does not have to take in the moment decision. One is shown the signal and then he has to take a decision in a similar fashion with other trades, like other trades. Lastly, it helps to forego emotional involvement. So when the decision making of the trade, a lot of people have this problem I've seen. They bring out some other chart, their own technical analysis, and then they share it everywhere on social media. The whole thing is that if there is a tendency for you to be emotional, first of all, trading is a lot to do with psychology. Okay, a lot to do with psychology. If you can be psychologically stable, equivalent towards your understanding, okay, towards any trade, then it is fine. If you have the hangover of previous trades and then sit to trade, no point trading. So a lot of people tend to have the psychological biases mixed up with the chart reading. So it helps if you're a systematic trader to forego all that or approach the chart only when your edge is present, because there's ways, and I will show you how to make those scanners. You can make those scanners where in live markets they will show you that your edge is present in the market now, so you can enter. Okay. So now next I'm going to take up RSI and then I'm going to take up Bollinger Bands. After Bollinger Bands, I'll show you my system of Bollinger Bands and then show you how from beginning to end you should make a system. What are the steps? Okay. Let's take up RSI and examples. RSI. What is RSI? A momentum oscillator. Very misconceived index, I must tell you. A misconceived indicator. Most people think there's a high and low at 30. Well, to be honest, there is a possibility of high and low at 70 and 30. Okay. But what is missing out is that everybody is not using the correct kind of RSI parameter. Should one deviate from the 14 RSI period is a big question. In discretionary trading, no. But in systematic trading, yes. In systematic trading, you can do that. You are allowed to do that. But you need to have an approach towards it. Why not 14 period RSI? Why some other period? Like for my moving averages, I did have a logic behind all these three. If you come to the course, I'll be able to explain you about logic in a proper structured manner, right? So we're going to pull up RSI and see the variations of RSI, right? Let's take some examples. So what I'm going to do is I'm going to show you some parameters of RSI. Just give me 1 second to open the chart. As I told you, I have got lots of chart in front of me. So okay, I'll make this daily chart only. So let's take up a very basic. Let's take a basic. Okay, let me do one thing. Let me ask you, whichever the first stock comes, I'll take up the chart. Anyone, shoot. Which stock? I'll take up that stock. Only the first stock which comes. Okay. Titan. बस हो गया. अरे भाई देवी और संजनो रुक जाइए. मिल गया, टाइटन मिल गया. जब भी वेबिनार कराता हूँ और बहुत सारे स्टॉक के नाम आने लगते हैं तो बस समझ लीजिए आप 2 घंटे का काम मेरे से 2 मिनट में पूछ लें. हो गया. थैंक यू सो मच गाइस. थैंक यू फॉर पार्टिसिपेटिंग. सो आई हैव गॉट टाइटन इन फ्रंट ऑफ मी. ओके. What I'm going to do is I'm going to put RSI. Give me 1 second. Just 1 second. Charting platform is a input issue. 1 second. Because so many screens are open, I'm getting confused. Yeah, finally open. So what I'm going to do is another problem. 1 second. Yes, sorry guys. Now I'm ready. Let's take up RSI. Okay. A relative strength default would look like this on Titan, stock chosen by you. Again, I'm saying let's not get into direction of stocks because I want to show you something important. This is not about saying where Titan will be tomorrow. Kindly understand. Everybody will get distracted otherwise. And even the course, I'm having very limited seats for that so that I can pay attention to each and every student and an idea. And every student will with me have an entire session where they will take a interview. Well, I'll take their interview also. Okay, so you all can basically you all can see the RSI, right? You can see the RSI, right? You can see the RSI on your screen. So where was I? To select this and select this. Yeah. So you can see the fact that RSI does not really go to 70 and 80 all the time. It has a different way of moving. Okay. One of the things I'm going to take up very importantly is the ranges of RSI, the possibilities of RSI, the reverse positive divergence, a lot of things people haven't heard of, which have been invented by a lot of good authors and good researchers. Okay, so 80 is a very important area of RSI, and we can see that the actual range is following through if we take 80 rather than this dotted line at 70. Okay. This is the first thing. A lot of misconceptions around it. Now, the person who invented the RSI said 70-30 for a reason. Let's take up something else. Let me modify this RSI into a different time period. Now, of course, this Titan is not something I have searched for, right? I've not searched for it like this moment. But of course, I'm going to show you if I change the period from 14 to say, for example, 28. I just double the period. What is the effect on RSI? Do you see an extreme in RSI, or do you see it coming towards 70? Again, don't take anything as a holy grail, but do you see it coming to 70 and actually stopping? This is just a stock given by you, sir. Thank you, Ravindraji, for participating and telling me the stock first. Raise your hands who can understand the difference between the two. The second RSI on the lower panel, raise your hands who loud and clear those who can. The second RSI on the lower panel is slower, is less sensitive. It will give signals of even divergences, but in the faster RSI, the divergences will be more before the actual reversal, right? Let's take a third example. Now, RSI calculation, a lot of people don't know. So, one of the things, important things, is to understand the relative strength index is generally calculated on price low. Now, I'm going to put the 28 RSI, which I have put 28 RSI. I will put as an RSI of the highs. Okay, I'm going to take an RSI of the highs, and then we see the change. What happens? I have done the modification, modify. Now you see the change. Now you see the divergences. Now you see the divergences. Below 70 divergences, right? Now you see the divergences are far more proper. So each of the aspects you can pull out from RSI, and there are more than RSI momentum indicators which in the calculation include price high and low, include price extremes. Some momentum indicators people come up to with the stochastic. Now stochastic is very sensitive. It just moves up and just moves down. If you know how to tweak the parameters in the right manner with a certain logic, like for example, when I teach RSI, I teach the logic behind how I can put in a different parameter. And moreover, there's so many other indicators related to momentum which will be there. Are you getting my point? So this is something important. Now RSI I'm going to stay till here. Why? Because if I'm using a momentum indicator, it does not really include many aspects of the price. So if I show you some of the trading systems, you will get confused because they involve rules other than just the momentum indicator, right? So now we'll come to boiling the bands. That was the daily chart, Pratik ji. That was the daily chart. Uh, well, Ravinder ji, also since you asked about Titan, this is not to discuss any stock direction particularly, but I had made a live session video where I have discussed Titan with a few students who were there. Oh, you can check my YouTube channel for that last video. Small video. I'd come live on markets. Now let's understand Bollinger Band. Bollinger Band are what they are showing me volatility. They are showing me volatility, right? They are showing me volatility, right? Okay, Ankurji just asking a question about RSI. If a stock is at an all-time high and RSI is below 50, what does it signify? If you're taking the regular RSI and if it is at 50, honestly, I have to look at the chart because it can be at 50 and it can be ready to go up also. No? It does not sound very bullish from where you're saying. I can understand that, but without looking at the chart, I can't say. That comes first. When even I have to read the RSI, just like that, it has come to 50, or it is there 50, or it has come from somewhere else to 50 and then going somewhere else. All those things. So, not really an all-in-all question right now. But thank you for asking. Good question. Things like this should come up in your mind, but you should look at 3 or 4 stocks like that and then make a judgment of what is happening commonly. Well, next comes Bollinger Bands. And Bollinger Band's expansion and contraction tell us a lot about volatility. In some cases, they signify extreme. So Bollinger Bands have their own set of things, rules. Now understand, when the bands are coming together, they're showing me, they're showing me, right? Yes, I'm coming to Swazi, I'm coming to how to take a trade on a system I have created through BB. Now, Bollinger Bands alone, I'm repeating it again and again. Bollinger Bands alone, or any technical indicator alone, is not going to give a trade. Is not going to give a trade. You will have to combine it and make a trading system out of it, right? So now what I'm going to do is I'm going to show you the steps to build a trading system first to clear all the confusion. To clear all the confusion, I want you to take the best output from this webinar. It is not about just coming to know, how would I take a trade tomorrow. This is the problem and the trap people fall in. A lot of people approach me, believe me. There are a lot of students who approach me. But you have to put in the work first. Achieve a consistency in your inputs, achieve a consistency in your outputs. Step one, first you begin with the aim. What type of a trade are you looking at? Are you looking to gather a very big move? Are you looking to gather a move with momentum? So, like for example, the T20 trade has been designed to give me moves that are showing immediate momentum. That is showing me immediate momentum. And that is just one of my moving averages resisting. Okay. The other which I have made for positional trades only on the basis of moving average and combining with other things also. Right. And if I'm using momentum, if I'm using magnitude of move, if I'm looking at immediate entries, all these will bring out certain qualities of price and different indicators. I can, with those I can derive, okay, which combination of indicators I should use. Remember the word combination. That is why I'm putting it in a course. Otherwise, I would have just put it in one day seminar or webinar. There's a combination of indicators, right? And the quality and the structure of the move can also be derived if you know the indicators intimately. Intimately you have to know it. People go to the markets and trade options. They don't know what option Greeks are. That is why when I have the options course, I ask them, do you know how many times have you traded options? And listen. First class I asked them, first thing, how many times have you traded options? Do you know options in and out? No. First, it's a habit. Using your capital responsibly is a habit. Successful traders are not the traders who make the most amount of money every day. They are the ones who manage risk in the best manner every day. So responsibly, you have to see your capital and preserve your capital and apply your capital. And therefore, knowing indicators intimately is important because you're approaching something. You might as well cut open and see what is there in depth. Okay. Now, these are the three initial steps. Then you come to your final hypothesis. Okay. You note down the kind of trades which is being shown. Okay. Next, you use filtering indicators. Thank you so much, Nitinji. Filtering indicators. How do you filter? Because sometimes you will get erratic signals. If you use 3 indicators or 2 indicators, you got erratic signals. Now you can understand the nature of that erraticism because you have understood the logic behind each and every indicator. If you can understand the nature of that erraticism, you see, market is for me just a scoreboard. Most of the time, I'm developing my strategies or doing my homework or discretionary trade. Market is a very small scoreboard, sometimes only a 10-20 minute job. People think, you see, the best traders are made after 3:30 in Indian markets. The best traders are made, the best strategies are made after 3:30. Agree or disagree? Raise your hand. How many? I want to see how many have taken steps to take some time methodical trade. Raise your hands. How many of you agree that the best traders are made after 3:30? Thank you for the support. I see India, I see that people over here, compared to when I started, are really passionate about preparing. That's the first step, guys. No matter where you are in your trading, trading curve, you're not going to be a Michael Jordan in overnight. Michael Jordan took a lot of practice to become what he is. And Michael Jordan's practice, he was not getting the access to NBA on his first day. You get the access to markets the first day. So don't get this thing by whatever curve you are in your learning. Keep learning. If you believe that markets are made, the best traders are made after 3:30. If you believe that, we are on the right track. And I'm with you. So then you come to the hypothesis. Now, this is a final hypothesis. This is not the final system. Okay. Then with this hypothesis, you use filtering indicators because you have understood why the erraticism is there. If you can use some indicator knowledge, which you can curb the erraticism, you will get iron out the whipsaws, iron out the not wanted movement, unwanted movements, etc. Right? If you don't get end up getting anywhere, because in certain situation, if your filter, if the indicator is not apt what you are using, or if you have not done your research and your study properly, the indicator is not apt what you're using, the the execution rules are not in place according to what the indicators represent, there's a problem. There is a problem. So what you have understood is that after doing these three steps, if you still don't get there, you are using a filter which is going to spoil the first initial indicators, group of indicators. So you start again from the step one. What is the type of trade you're looking for, right? And in case you find something interesting, now time to work on it even more. Maybe it is coming out 60% to your liking, 80% to your liking. To make it 90 or 100% to your liking, you might have to make some small changes. So you start working on that stage now. In my experience, okay, in my experience, only shown very few very professional traders that who got trained individually, very few about these in-depth things. And what I've seen is in the first few days, they will be in this area. But if they have the right knowledge and the right ideas clicking together, they very fast come to this area where they get things which are interesting. When they get things, yes, now it is working for them. And they get all excited, and it's really nice to see that they finally apply and it works out. Right? So it takes time when you're developing. Now, coming to the Bollinger Band example. Okay. Now you can see on the Bollinger Band or Bollinger Band, sorry, Bollinger or Bollinger Band, not Boy, Bollinger, right? Which was by respected technician who is also a chartered market technician, uh, Mr. John Bollinger. He had invented it. So these bands, you can see, just to give you an example on the screen right in front of you, there is something which is showing me red arrows and green arrows. Okay. Now I plotted a particular set of indicators where you can't see any lines because I have changed those lines into arrows. Okay. I'll take up that long question which is there after my explanation. Okay. Uh, I've plotted these arrows instead of these lines. So they're showing me buy sell signals. But you see, if the market is sideways, no point in buying or selling. The moment, the moment the they start breaking the lower end of the band, that means the volatility is going from lower levels to higher levels. Volatility is mean reverting, guys. Volatility is mean reverting. Okay. So volatility is going to higher levels now. So shorting it in this time is better. So all my sideways movement, if I've taken 1, 2, 3, 4, 5, 6, 7, 9, 10 signals, all my sideways movement, just because of one filter, which is Bollinger Bands. If I can use that clearly, yeah, yes, Ashokji, that will happen. Yeah, if I can use that clearly, my job is done. So now coming to an example of something related to Bollinger Band. Okay, I'll take up the questions which are there. Ravindraji is asking me. Welcome, Ashokji. Ravindraji is asking me. So if Bollinger bands show volatility within extremes, then it's more of an oscillator than an indicator. It is Uh, there a way to tweak the yes, there is a way to tweak the Bollinger Band. You can change the parameters. Okay, number one. Number two, the volatility. No, they are bound. They are unbound. Sorry, they are not oscillators. They are indicators. Bollinger Band can go anywhere along with a moving average. So there's a calculation of Bollinger Band. I would recommend you to look up what the calculation is, and definitely you will get the right direction. Yes, there is a way you can tweak the Bollinger Band. Okay, there is a way you can do that. Now, time for me to show you the things which I have been wanting to come about it, right? And again, this is something you all can take away from, but believe me, some parts of it are supposed to be understood in a learning structure. And I would say join the course on only indicators and trading systems, which is coming up in September. I'm going to talk about it also briefly. But yes, genuinely, it's an online course. Absolutely. So, what I'm going to do now is I'm going to show you a thing I've created using two of my signals. Two of my signals. So one is out of the Bollinger Band. Okay. One is out of the Bollinger Band. Okay. And the other is a tweaked indicator, which you can see in the arrow. I have made that arrow thing. Okay. Made that arrow thing. But as I said, alone this will not work. So there are things I'm taking up. So this is the half an hourly chart. Okay. Half an hour chart on Hero Honda. And I'm going to show how this has been working out, particularly on not just Hero Honda, on number of stocks other than Hero Honda. Okay, not just Hero Honda, on number of stocks other than Hero Honda. Also, I will show you how it is working out. So, one second, please. Yeah, one second, kindly wait. Yes. So here you can see my screen, which has become big enough for you to see. And here we go. Okay, let's look at the logic. Logic number one is this green arrow should be there. Okay, and this is an indicator. As I said, markets have a different nature. When they go up, when they go down, they're different. So for the short side also, in fact, I have more different things for the short side, more interesting things. But today I'm taking up this particular system. The green arrow you can see is a signal which is being provided by the screen. Okay. Now, green arrow by itself is not a buy call for me. Okay, this is not a buy. This does not fall under my system. This does. This does. I'll show you how intraday I can actually get out a signal from just a simple scanner I'm putting into the market. First of all, everyone is with me, alive and excited about this, because this is one of the best things I'm going to show today. Alive and excited about this? Raise your hands. Everyone is with me? Thank you guys. Great. I want you all to pay complete attention to each step I'm taking and ask me questions if needed, because when you are going to see this, again, I don't know. I hope you all choose to join the course. Although there are limited seats, I hope you all register and choose to join the course. I'll be showing the details, but definitely this is the kind of thing we will be doing with a lot of systems and indicators, not just during the course. After the course is just when the journey starts together. Okay, so I'm having my condition. What is my condition? Number one, the arrow you see, green arrow, that should be there. This arrow should be there. This is indicating a buy from one of the combination of indicators which I have designed. This is automatic on the screen. Okay, this is just one indicator, tweaked very well. Now this arrow which I am taking is crossing the middle line of the Bollinger Band. This is my first criteria, crossing and closing above the middle Bollinger Band. And my second criteria is that if I go back, okay, if I go back to two candles, if I go back to two candles, I can clearly see that there is a lower low. There is a lower low. Okay. One second. I have to calculate. Is it two? Because this calculation on this takes number of candles. Okay. So 1 second. I will calculate the thing. Where did it go, guys? Just 1 second. Yeah. So it is three candles. Sorry. This rule is three candles, right? There's certain, for the short ones I made with another indicator which was two. This is three. So this is there for the third candle before this. 1, 2, 3. There should be a lower low below the lower band. Now here in this case it's a lower low like this. That's going all the way penetrating beyond the lower band. But generally there should be one lower low of the candle, right? One lower low. Let's see how I can place it in a certain kind of scanner or query. So I go to my charting software, and those who are going to go on this path, you will have to come to something professional, and I'll guide you through. I'll guide through everything. So I take up the parameters, which are just usual parameters, no changes in this simple Bollinger Band I've taken. Okay, I have chosen a condition low below the lower band. When do I check it? When do I check it? Back. I go back three candles and I check it. Okay. So I have done that. Okay. This is done. Second condition is again simple Bollinger Bands, nothing changed. Condition is a close crossing above the middle band. Okay. When these two conditions are fulfilled on the half an hourly chart, my signal will come about. And where do I check it? On the 0th candle. That means the current candle. Okay, 0th candle, current candle. So regarding this, if you have any confusion, it's a greater detail. I will now going to go ahead and show you how I will run the scanner. Okay, so what I'm going to do is I'm going to make this 0. This is the 0th period, and I'm going to run the scanner. It is running at the FNO scripts. All of you can see it is running the FNO scripts, and once it is done, it will show me the stocks which it is having to show. This is much faster generally, I think, because of the webinar also going on. Yep. Okay, so I have Arvind, I have Excite, and I have Marico. Arvind, Excite, and Marico. Now, guys, I'm just showing you how this is coming about. One question is there. Just a second. Does it work on other time frames? Sir, I'm showing you a system I made because I have tested in this time frame, working out best way. There are other things you can do with other time frames. I'm sure you will come to amazing things. But it is not so straightforward. If it was so straightforward, there would be no webinar like this. No, everybody would say that this is going above this, by this is going below this. Show you other trades which come about and how they've worked or how they've got stopped out. I'm showing it to you live. Okay. Okay. For example, this particular one. Okay. This entry is right now not there. Why? Because there's another filter to the system which I'm not putting over here at the moment, which is another volatility indicator. There's already existing volatility. I want to see places where the volatility is sprouting. Okay. So we'll come to this. Okay, so three things we got. If I ran this at 3:15 to 3:30, I would have got three. Now I'm running. If I went 1 hour back, so this is around 3 o'clock, I would get these signals. Again, the software is running the scanner, and I see Hindustan Petroleum. So I see that my green arrow is here. Absolutely, yes, absolutely. So this is showing me something like a buy signal. This is a buy signal. Sri Cement in Petro. Okay. Okay. Now other filters are there, as I said. So I'm showing it to you to show how you can use the scanner. Don't really just go try any time frame all of a sudden. Look at it, observe it, build your system. Most welcome to take any kind of help from me. I recommend you highly to join the course. Right? Now I'm going to go 2 candles back. So I did 0 candle, 1 candle, and I'm going to go 2 candles back, and let's see what this scanner had to give me. Okay, this green arrow is present, 2 candles back, 0th candle, first candle, second candle. Okay, this was a signal. I'm just showing you what stages of the stock this is showing me the signal, which is the most interesting part about it. Some days the market will move immediately after the signal. Some days obviously it can just hover around if 3:30 is coming close, right? Again, Tata Power. Okay. Well, here the filter will take out the trade because this particular volatility is expanding, and I don't know because I have to right now put the filter. So later we can do that. But I hope you're getting my point. See the stage at which it is showing me. This has a certain logic. Very simple steps. No trades on the 4th candle from the 5th candle from the front. Now let's go to the one before this. I'm going to take almost the entire day. Again, no trade before this. It's okay. You don't have to get a trade every half an hour. In fact, trading less is more. Trading quality is important. Yeah. This is that a green arrow? So I'm looking at the number 7th candle, number 6 candle starting from 0, right? So 0, 1, 2, 3, 4, 5, 6. Okay, so yes, this is having an arrow. So yes, absolutely, this is in the buy mode from this particular indicator as well. Now let's go to 7, and you can see the volatility is less, so it comes up for a good setup. 8, 7, no trade. I'm doing number 8 now. Let's see how many trades or what I get. Nothing. Then I'll do number 9. Every half an hour I'm running this and seeing how this is happening. I can run in the middle of the half an hour also, but then it will give me until what the candle is doing. Oh, I'm getting 4. Let's check out Biocon. So Biocon, 1, 2, 3, 4, 5, 6, 7, 8. It is in the buy mode. Is it in the buy mode? Yes, it is in the buy mode. So if I went long at around 614, also if I take 613 and a half, if I went long, intraday I would have got 15 bucks on it. This is how powerful it is coming out to be. Castrol. Now Castrol, let's check out. 1, 2, 3, 4, 5, 6. So this must be the candle, is it? No, this is the candle, right? Yeah. So this is touching the upper Bollinger Band. Anyway, this is not going to be an entry point, but nonetheless, thank you Castrol for showing us something interesting. Hiromoto. Again, 1, 2, 3, 4, 5, 6, 7, 8, 9. And the 0th candle included. So this is the close above, and there's a green mode. Perfect. So if I go long around 3,235, I can get a decent move on the upside. 30, 40 rupees, 30 rupees roughly, 25, 30 rupees. IOC, let's check out. IOC again very wide. Just looking at this, I can be clear that no, I don't have to go long. And I don't know when the signal is coming. I think it's coming around here. 1, 2, 0, 1, 2, 3, 4, 5, 6, 7, 8, 9. No, no, I don't take this straight. Right, pretty light. Let's take it. 0, 1, 2, 3, 4, 5, 6, 7, 8, 9. Oh my god, isn't this a beautiful trade? Isn't this showing me something beautiful? If I go low on 1150, I have a good 2.5% upside up to which I can see. Even if I get a part of that move, I think it's a good one-way move. I think this is a good. So I'm looking for immediate momentum because I'm using RSI in a I'm using Bollinger Band in a smart way. So I guys, I hope you got this point. I think enough example to iterate the major moves how they're coming about. Okay. Of course, Amitji, this webinar is going to be on YouTube. It is free for everybody. Everybody. It is going to be on YouTube. It is free for everybody, and I have no problem in sharing knowledge. It's just that some things, for the sake of simplicity of learning, a structure of learning, I have not gone into a lot of secret sauces or this or that. There are no secret sauces. Knowledge is everybody's. Okay. I will post this on YouTube by today itself. Okay. I want you all to share it with your friends as well. Gopal Krishna ji, sorry I missed your message earlier. Target could be upper band. Well, the entry rules and exit rules are there. So yes, possibly if there's a move of the upper band, that could be one of the targets. Okay. My YouTube channel is by my name Mohak Pachisia. I'll share everything. Lot of messages coming. Okay, thank you so much. Yes, I know all of you like it, right? How many of you like this system? Raise your hands. How many of you are liking it? Thank you so much. Thank you so much for your support. It's very kind of you. And believe me, I gave this webinar thing out in last week. Sorry, the beginning of the week, I put out this message. I did not know that Friday you're going to get a market where you're going to see one of my systems working out so beautifully. And each of my system, when I'm showing something, the inputs, the learning, the logic is important. Uh, I'm going to come to that, Ravinder ji. I'm going to come to that. I'm going to come to that spider thing, right? You have to buy the software if you want to keep, but there's a part of the thing I'm going to come to. I'm going to make sure that all of you get a hand on the software in certain situation. I will share that. I'll just come to that. No, session is not over yet. We have about 5-10 minutes left. Although we have shot beyond 11 o'clock, but we have time. Okay, we have things which are yet to be done, but the session is not over yet. Okay, there are things I'm about to share now, right? So Bollinger Bands we did, I miss RSI we did, and we have done this particularly. So guys, I hope you have taken amazing things from here. Give me 5 minutes. I'm going to talk about the indicator factory course so that everybody is clear about what this course is meant for. This course is an online web session course. Okay. What I want you all to take away from this particularly is that the indicator factory is going to come in and become a catalyst for you to change your way of trading, to get on a different kind of track of trading. I would recommend each one of you, it is worth trying. If it suits your personality to find out systems like that and trade them like that, believe me, it also has a very good space. Till now, I have never come up with something like this. And this is the first time. Although, of course, I have done chartered market technician, all levels, and almost half of it is systems trading. But I wanted to come to it where I'm confident enough to teach people and to show them how things are valid and not just show random indicators on just certain specific market phase. Okay, so what happens is that in this course, it is going to be an online course, and this online course will go on for 5 sessions. This online course will go on for 5 sessions, right? It starts now. Cutting starts now. Yeah, sorry for the disturbance. Right, it starts on the 22nd of September. We are starting the course on 22nd of September. Okay. The timing somebody is asking, it can be roughly about 4 to 6 p.m. and the timings 4 to 6 p.m. The charges will be, and I promise you this is something which commands a lot of different kind of bigger charge, but since this is the first time, I'm keeping it only at rupees 10,000, and there are limited seats. So what you can do is you can pay rupees 2,000 and you can, as an advance, maybe today, right? And the rest of the fees you can pay by 15 September. If you pay before 15 September, you will get an early bird discount. The only reason I'm giving all these kind of discounts, you will never see me generally give any early bird discount. You can check any webinar, any of my course, never have I given such early bird discounts. Only reason I'm giving is because I want you to explore this. I want you to take this up. I want you to explore this, right? And if you explore this, it is my wish, and your success is my success. That is what I'm looking forward to, right? What do you get in the course? Of course, you get to know how to make your own system. Yeah? How to make your own system. You will get to know how to make your own system. Mr. Madhu, recording will be available. So for a week, the recording will be available. When you come on Saturday, Sunday, recording will be available for a week till the next coming Friday. That is my personal guarantee. Right? You get the knowledge about indicators and different types, how to tweak indicators. You know how to learn making systems with examples. Secondly, you get a 20-day free trial of the Spider software. 20-day free trial of the Spider software on which my system will already be scanning. In some cases, I will share with you all the parameters. In some cases, I'm planning to keep that system for a future subscription, for future paid subscription. So I will not be sharing, but 20 days for free it will be there. And the normal charge of this software is big. So 20 days free software actually suffices a lot of the whole fees. Also, if you don't want to take an expensive software later after the free trial, you can use other platforms to make your own scanners and own ways of selecting stocks and systems, right? It's not necessary that you have to use Spider only, but yes, this is one of the best according to me. That is why I use it. And any time of the after the course, we will sit and have an interview, and I want to see how much you have learned. Once you pass through that stage, you will come to the core group. The core group will have students who are specialized with systems. They're continuously developing new systems, can help each other. And my purpose with this course is not just about coming and giving one course. It's about long term. I want it to become a team, a community where things are shared with each other. Okay. And in the future, somebody is asking, yes, I plan to take up the subscription. I will give paid calls and all that. So guys, you can contact me on this number. For the sake of simplicity, just one second. Sorry. This is my other thing. Extremely sorry. This is a workshop in Kolkata. Okay. One second. This is the workshop I'm having on the 15th, 16th. This is the course. You can call me on this number. Message me on this number. What I'm going to do is I'm going to make a WhatsApp group from the Telegram channel. You guys can enter that WhatsApp group. Only I will be able to message in that group, so that I don't want people spamming. You can message me personally. I'll be the group admin. You can message me personally. And once you've done that, I'll share the bank details over there. You can pay 2,000 rupees and book your seat by 25th, by the 15th of September. By the 15th of September, if you have given rupees 8,000, which is after the early bird discount, that is done. Your job is done. 22nd September, we start the course. There are limited seats. Again, I'm telling you because I want to pay attention on each and every student, right? After the course, you will not get the recording forever. You will get the recording if you miss a class. So you'll get the recording for the next 1 week. If you miss a class, you want to repeat the class, you're more than welcome. Not a problem. Do you get any buy sell calls from? No, this is not course about giving buy sell calls particularly, because I don't like to mix up these two things. But as an inevitable part of learning, sometimes what we discuss in class, or actually always what I discuss, even today I'm having a session, yesterday I had a session, whatever I discuss in class, something or the other comes up in the market. In this course, obviously this will come. So not like I'm not going to give any formal buy sell signal, sorry. That will be different. I'm planning to come to subscriptions and all only for professional traders in the month of October, November, or November, December, which will be costing, amount for 2 months. Okay, so if anybody is interested, you can put your name. I'm not sure if I'll do that immediately, but yeah, the course is coming up. No, Mr. Madhu, that's the whole point. No, why do you want that? If you're exploring something, if it is out in the world, right? Okay. Yes, it's a Saturday Sunday session. The rest, what you can do is you can ask me personally, right? It's Saturday Sunday session, roughly 4 to 6 p.m. Roughly 4 to 6 p.m. Right? If you miss a class, recording will be available for a few days. Roughly 5 to 6 days, recording will be available. Oh, Yogita ji, I have written a book. I'm authoring a book on trading psychology. That is one of the subjects I love. And thank you so much for asking such a kind question. Not on this topic though. Yes. Daily session for 5 sessions, Saturday, Sunday, 5 sessions. And Puneet is saying, and a few other of my students, my old students get a different discount, which will be the students in the inner circle group, which is another core research group, which I have of only my students who have been there since even 3 years. That's a free group, but those core students do a lot of hard work and share a lot of ideas, have a lot of interest. For them, there will be a different discount, which I'll be messaging in the core group, not a problem. Yes, aspects of entry, exit, money management, psychology also a little bit. No, 5 session course, a 5 session course, a 5 session course, guys, a 5 session course, not 5 weekends, right? 5 session course. And after that, we will be in touch if you need anything at all, right? So I'll be putting that WhatsApp group link. Those who are really serious, you can, I'll send the bank details. You send a screenshot to me of the payment of rupees 2000 minimum. You can pay the 8000 like at this moment also. This is non-refundable advance. The rest you can 6000 you can pay. But if you pay this, I will book your seat. I'm going out. Okay. If you pay this, I'll book your seat. Right. So guys, thank you so much. The free trial of the spider is a part of the course. That is something, a bonus you get with the course. After the course or with the course, you can take the free trial. I have bulk dealing with spider, so my students get a discount if they want to subscribe it also, if you take it through me. No, not in options, not in options, not in options, because you know options are regulated by other factors also. Why do you want to play with fire? If you have to know options, then you first know options and then you make system on. The same system will not work on options on the Thursday or a Monday or a starting of the month, right? Well, the paid subscription post the trial will be north of 50,000 rupees. As I said, I'm getting the best discount for my students. First to join the course, then you take the free trial. I would recommend you to do that way. And in case you don't want to use this thing, not the 50,000 rupees, it will be 9G as I said. But if first take the free trial, I'm getting the best discount for my students. If it is possible, then I will get the best discount for my student. It will be almost equal to or less than Spider you will get from anywhere else, because I have done something with them. I have my systems running. So my students, I can dictate the price with them. So you don't have to worry about that, right? I'm a bulk dealer that way. And it is all about the learning. Believe me, it is about the learning, because you will be getting it almost at the same price or lesser than you would get it anywhere else. So genuinely, it is about the learning. My job is to teach you and make you do things interesting. So guys, I'm putting the link of the WhatsApp group. What you can do is, through Telegram you can come to that group. It will be an only admin group. You can send me your name on a WhatsApp message and a screenshot when you pay the advance. I'll send the bank details to that, right? So thank you so much, guys. I hope you enjoyed the session thoroughly. I had a great time. And those who are watching it on YouTube, come to my Telegram channel. There I have set the Telegram link under the YouTube details, right? Thank you so much, Madhuji. Thank you, everybody. All of the thank you messages. Thank you. Genuinely, I'm glad. Thank you. All of you took out so much time. Some very niche webinar we had today, and uh, further details to follow. I hope you've taken down the number, right? Thank you all. Thank you so much, Bibaris, everybody. So, guys, I'll be signing off now. Take care. Good night. Bye bye. See you soon. Okay. Thank you, Nayan. Yes, my heart goes to every state of this country, everywhere. Thank you. Uh, Thank you so much. Absolutely, guys. So, Puneet, Gautamji, take care. Goodbye. I will be going. Nitinji, thank you. Bye bye. Thank you so much. I'm signing off, and I will see you on the other side. Thank you, Nayan. Bye bye. Thank you again, guys, everybody. Bye bye.